Hey everybody, Dave here, Hidden Freedom, and welcome back to another video on this Christmas day. Hopefully you had a fantastic Christmas, you got everything you wanted, and you gave somebody else everything that they wanted. So I hope you have a safe, happy, Merry Christmas, and that's from Hidden Freedom. And I'm not recording this on Christmas, but this is coming out on Christmas. So what I want to talk about today is the new ETFs from Nationwide, and we've kind of been, I wouldn't say we're anticipating these, but several months ago I was like, why don't they have these? I wish they had these, you know? So that's what we're going to talk about in this video, so let's not waste time, let's go ahead and get started. The information expressed in this video is my opinion and my opinion only. This information is for entertainment purposes only. Please do your own research. All right, here we go. So we got NUSI there, which we've all talked about. I've made quite a few videos on NUSI. You can take a look at those videos. And that was the only one from Nationwide at the time. That's against the Qs, by the way. So it says Nasdaq 100 right there. And now they've released these three new ones here, NSPI NDJI, and then we got NTKI there. And, you know, I'm going to be honest with you, they got kind of crappy names compared to NUSI. You know, NUSI is juicy, right? We got NSPI. I mean, I don't even know how to come up with a funky name for those, right? DJI is a drone maker, so Dow Jones, the drone maker, you know, I don't know. Maybe we'll come up with something new as time goes on. So yes, NUSI there's a collar strategy, and that's against the Nasdaq 100 stocks. I've talked about it in many videos. I'm not going to go real in depth in NUSI or actually any of these funds. I just want to make these known and what they are and what they do, and also compare them against the GlobalXs as well, because until recently we really didn't have some other collar options. NUSI was really it for quite a while there. And then GlobalX came out with theirs as well. So yes, NSPI there is the collar strategy against the SP 500. And we got the NDJI there is the collar strategy against the Dow Jones index. And then we also have the NTKI, which is the Russell 2000 collar strategy. And all of these, by the way, have a 0.68 expense ratio, and you're thinking, oh, that's expensive, that's high. VU and VTI is 0.02, 0.03, you know, it's like, these are managed ETFs, folks, all right? They're also income ETFs, and they pay monthly, all right? So you're gonna pay more for that. Look at SPHD is a monthly dividend. It's not an income ETF, it's not doing options, so SPHD I think is a 0.3 if I'm not mistaken. So it's kind of high compared to, you know, like, you know, VYM or SCHD, and because it pays out monthly. So you have to pay for that, you know, overhead to get a check every month, right? And these are also income ETFs that are doing options, which they have to manage. And these are managed ETFs as well, so you're going to pay a little bit more for those, okay? So don't really get discouraged by that, because at the end of the day, to me, it's still worth it. Now, you could run the collar strategy yourself, and you might be able to run it cheaper, but we're going to talk about that just in a minute here, because you're not going to be able to really duplicate what they're doing exactly, because you need a boatload of money to duplicate what they're doing. All right, so we got NUSI here, which I've talked about. I actually own NUSI. Let's go and take a look at my portfolio here. And let's see, go here to current portfolio. Let's scroll all the way down the bottom here. And as soon as these things load, all right, scrolling down the bottom here. So we got NUSI right here. This is the only one of the four that I own, because the other ones from Nationwide just came out December 10th. All right, NUSI's been out for a while. The other three just came out on December 10th. And I have $151,000 in NUSI right here. And I talked about in my last video that I'm gonna be reducing the actual exposure to NUSI. I'm not gonna actually sell any NUSI at all. I'm just not gonna add to NUSI. And I'll be going into more Devo and more JEPI. But Matt Money and Jerry and I, over at Retire With Less, we were talking, I don't know, several months ago now, 6, 7, 8 months ago, maybe, you know, I don't know, gestation period or something like that. And we were talking about, why don't they have an SP 500 one? Oh man, I wish they had an SP 500 car strategy, you know, and I guess We were like hoping they had one against the Russell 2000 and all that stuff, and they just didn't have it. You know, and that was back when we were big on NUSI, and I'm still big on NUSI, but just not as much as I had been, because you just don't get a crash really that often in the markets, and that's really all it's going to do for you. All right, going back here to the Nationwide, just looking at their web page here, and I'm not really going to go into prospectus or anything like that. Just kind of letting you know that they're running a collar strategy, and we're going to pull up the actual holdings and all that, just to kind of give you an idea of what they're doing. But I'm not going to go through the perspectives, because honestly it's very similar to the NUSI, the verbiage. So if you want to look at my previous video on NUSI, you look it up here, and I talk about all of the perspectives in there and all that stuff. It's very similar. It's just a different fund or different index they're actually tracking, and then the different stocks that they're holding. But in general, same strategy. So NUSI owns all of the Nasdaq 100 stocks, and then they run the collar strategy against the NDX, which is cash settled. And then NSPI here, we're going to take a look at the holdings there, but they're going to own all of the S&P 500 stocks in the portfolio. NDJI, they're going to own all of the Dow Jones stocks. And then NTKI, they're going to own all of the Russell 2000 stocks. And let's go ahead and pull up the holdings for the NSPI here. So here is the NSPI holdings as of 12/21, which is actually yesterday. And if we scroll down, so this is all of the S&P 500 stocks that they own here. Okay, so it's very similar to S&P 500 if they just own the index. They own all the individual stocks, and then they run a collar strategy against the S&P 500 SPX, which if I can scroll down far enough here, we should see the SPX, and there it is right there. So if we scroll over here, there's the SPX. So they own all of the S&P 500 stocks, and then they run the collar strategy against the SPX, which is cash settled. And that's key, and we're going to talk about that at the very end of the video. Going back here, we looked at the S&P 500 and NSPI. Let's go and look at the NDJI, which is the Dow Jones. Here is the Dow Jones holdings as of yesterday, and so they own all of the Dow Jones stocks here, and they also have, and here's all the shares by the way that they have, because they don't just have 100 each, right? They're running, obviously they have a lot of money in these funds, and then they run the collar strategy against the DJX, which is cash settled as well. And like I said, that is key. They got 460 contracts on. That's a boatload of contracts, by the way. Going back here to the Nationwide website, we have the NTKI, which is the Russell 2000. So let's go ahead and take a look at the holdings on the Russell 2000. Here are the holdings on the NTKI. So they own all the Russell 2000 stocks there. Here's all the shares for each position there. It's alphabetical order. Let's scroll down here, and we're going to see the collar strategy. They're going to run those against, let's see, I think it's the RUT if I'm not mistaken here. And let's show all the way down the R. So let's scroll down even faster here. And there it is right there. So there's the Russell 2000, and that's cash settled. So they got 65 contracts on in the collar strategy there. And if you just want to know what strikes they have, there they are right there. There's the call side, there's the put side. And then you can kind of figure out how far down they were. You have to kind of look at these daily, because they can technically take the call side off anytime they want, because these are managed ETFs. They can take that off. Now they normally leave the put side on, but if you want to kind of get an idea of how far they go down every month, this also has the expiry on it as well, so you can get the expiry, you can get the put, you can get the call, you can also get the strike price as well. And you can get an idea of how far they go down, and you can track it, because they don't go, it's not rules based per se. They don't go down like the GlobalX funds do, the same amount every month, and they have the same distance between the strikes and all that on the call and the put side. NUSI is they kind of look at the market conditions and where the market's at. They look at a chart and all that stuff, and they kind of put the calls and the puts on based on that. It's a managed ETF, so it's not rules based like the GlobalX funds are. All right, now that we've talked about all 4 funds here a little bit, and we kind of know what the holdings are, obviously we kind of know what the holdings are, we should, right? and we know that they're using a cash settled index that they're running the collar strategy against. You know, what other fund is out there that compares to these? And the only one that I know of and that is from the actual GlobalX. So if we scroll over here, I kind of just took a snapshot from the GlobalX website here. We got QRMI and we got XRMI. I don't know if that's how you pronounce them or not, but those are relatively new. Those come out the last several months or so. And everybody's been talking about those, and they also been talking about the XCLR and the QCLR. So guess what? At this point, Nationwide actually has some on the Dow Jones, and they now have them on the Russell 2000, and GlobalX doesn't. As far as I'm aware, they only have these two, and that's on the Nasdaq and the SP 500. So that puts Nationwide a little bit ahead in my book. Not to mention they're also Nationwide. I mean, I even had somebody say one time in my comments saying they're a a mortgage company. What are they doing with ETFs? I'm like, that's a fair point. GlobalX is just GlobalX. I'm not the biggest fan of GlobalX. I do own some of their ETFs. I'm not a big fan of them, to be honest with you. But they, I mean, they are what they are. They offer some products here that could be compelling for some people. And Nationwide, I think, does things a little bit better than GlobalX does. GlobalX seems to be just all about collecting that expense ratio versus, I think, with Nationwide, you're actually getting a little bit better product, in my opinion. You're getting a managed ETF. Now, granted, the expense ratios are just a little bit higher, but you are getting the managed ETF, so they can pull off those calls if they want. They can adjust them, depending on the market conditions and all that stuff. Versus, the GlobalX here, what they do is just have it rules based. So the difference between the QRMI and the XRMI is, and between the XCLR and the QCLR is, which seeks to generate income from net credit collar strategy, but collar can also be net debit, and the net debit ones are these ones here. So they, particularly if they seek to maintain greater upside than downside potential. So these are a little bit different strategies, right? So QRMI and XRMI and XCLR and QLR or QCLR, I should say, are both collar strategies, or all four collar strategies, I should call them, but they might not have a net credit on one side, and the other side might just be a little bit of protection on the downside, but it might not be a credit. It could be a net debit, right? And another thing we're talking about here, and I'm not going to talk about it in depth because there's so much misinformation going out there, and I don't want to put misinformation out myself, but taxes, all of these are going to be taxed very similar to NUSI, which could be NII, could be qualified dividends, could be long-term capital gains, it could be return on capital as well. I've never seen the verbiage in their prospects saying that there's return on capital, but I have seen other people say it is. And I'm just kind of waiting until I get the documents, next year around February, March, and I do my taxes. I'll actually make a video on it, talking about how they're taxed, because I don't really want to spread misinformation out here. But it could be a combination of all three things. So my guess is that all four of these are exactly the same as far as taxes are concerned. And so that kind of makes it easy. All right, the next thing I want to talk about here is, the returns, right? So NUSI's been out for a while. We kind of know it's about 7.8, 7.9%, I think, right now. And let's just look at my portfolio real quick. We'll scroll over to the right. And right now we see it at 7.78 for NUSI there. I don't have the other ones in here, but we don't know what they're going to be, all right? So we really need to kind of wait a little bit of time before we can kind of figure out what the returns are going to be. Not necessarily returns, but I'm talking about their actual distributions, right? So in this case here, I'm assuming that the S&P 500 compared to NUSI is going to be less. NUSI is going to be more, and the only reason why is because the Nasdaq has a higher return when it comes to options. And the same thing, so what I would say is the SP 500 NSPI here is going to have a less yield than NUSI. The Dow Jones is going to even have a less yield than NSPI. Obviously less than NUSI because the options on the Dow Jones is just not that high. And then we got the Russell down here at the NTKI, and that one is actually going to have more distribution or higher yield than NUSI will, because the options against the Russell 2000 are a lot, I wouldn't say they're a lot higher, but they are higher than the Nasdaq. All right, can you reproduce these on your own? You know, could you buy QQQ? Could you buy IWM? Could you buy, you know, the Dow Jones? Could you buy, which I think is just DIA for that one? And could you buy the SPI and reproduce this? Yes, you could. It wouldn't be very easy to do though, because what they're doing here is they're running against the cash settled. So they keep the positions in there and then they churn the income off the cash settled index itself, and you really can't do that with QQQ, SPY, IWM, or the Dow Jones, because you would get called away, right? And that's, you have to buy it back, and it's not the same thing. It's not an apples to apples comparison. You can still run a collar strategy against those, but it wouldn't be exactly the same. You couldn't churn the income. And in order to reproduce what they're doing here, you have to own at least 100 shares of every stock here to kind of reproduce what they're doing in a way. And, or at least, it wouldn't have to be 100 shares. I take that back. You'd have to kind of look at the weighting and then base the shares off of that. But you'd have to own all the stocks and in the index. So if the SP 500 stocks, you have to own 500 stocks, right? And you have to have the right weighting and all that stuff to kind of reproduce. And this one, by the way, is just the Russell 2000. But so in this case here, you'd have to own all the Russell 2000 stocks, and there's a lot of them, right? And it doesn't have to be 100 shares of each, but based on the weighting, you have to kind of put it where that should be in the portfolio. And then you could run a collar strategy against that, against the RUT, just one contract or something like that, because to reproduce that, it would, you know, cost a lot of money, right? And or just have one contract, you'd have to have more shares of each one of the positions. That goes for every single one of these ETFs, right? The Dow Jones one, the SP 500 one, the Nasdaq one, which is NUSI, and then we got the Russell 2000 here. So you really can't reproduce exactly what they're doing. In my opinion, there's a big difference between owning the IWM, the SPY, the QQQ, and the Dow Jones, which I think is just DJI, if I'm not mistaken, or DIA, I should say, because it would get called away, right? And it gets called away, and then you got to buy it back, and things are going to just be different, right? It gets called away and it blows past your strike. Well, guess what? They still own the underlying stocks here. So if their RUT gets cash settled, it doesn't matter. They're turning it in for income anyway, and they're going to pay the income to you monthly, but they're still holding the positions. Nothing's getting called away at all. It's all cash settled. It's a big difference there, right? You can't, it's not the same thing. It's not an apples to apples comparison, and it's not gonna work in theory how you think it's gonna work. All right, so what do you think of these new ETFs from Nationwide? Honestly, I would hold out. I wouldn't be getting into them right away. That's just how I feel. Get an idea of what they're gonna be paying out every month. Give it a couple of months, get some, you know, payments out. Get an idea of what it's gonna be, but I kind of told you that the S&P 500 one is gonna be a little bit less than NUSI. We got the Dow Jones going to be a little bit less than the S&P 500 one, and then you got the Russell 2000 one, which will be a little bit higher than NUSI's payout. So it kind of gives you a rough idea of what they're going to be. But I highly recommend that you kind of just wait a little bit to get an idea of what the payments are going to be, which we should know here in January, I believe, should be the first payout. So that's kind of interesting. We'll keep track of these. Let me know if you're interested in these at all. And if you're, you know, kind of looking at getting into these, honestly, the Russell 2000 ones kind of sounds attractive to me, so I might actually add some shares to that. I don't know, we'll see. But anyways, I hope you had a great Christmas, and we'll see you in the next video. Thanks for watching.